China has just launched a strike that could reshape the global economy. 125% tariffs on U.S. exports. It hit with the force of a thunderclap, echoing through every financial market. But don't be fooled, this isn't the full story. Not even close. This was just the opening shot, the first rumble of what's coming. What's happening beneath the surface is far more chilling, quiet, deliberate, and terrifyingly calculated. By the time Washington fully grasps what's going on, it may already be too late. This isn't some knee-jerk retaliation. It's a cold, controlled decoupling, a deliberate pulling away from the global system that has anchored the US and the world for decades. And it's happening far faster than anyone on the Western side is willing to admit. It all began on April 10, 2025. China blindsided US exporters with a savage blow. Tariffs targeting American automobiles, technology, machinery, and semiconductor parts. Industries that last year funneled more than $36 billion into the US economy. The blow landed just 72 hours after President Trump authorized $88 billion in tariffs on Chinese electric vehicles and rare earth minerals. The timing was flawless, precise, surgical. Bloomberg called it a precision strike. But China wasn't just lashing out in retaliation. No, it was making a statement, a calculated move to shift the global balance. Wang Yong, a senior advisor at Peking University, laid it bare. We are targeting leverage industries tied to US electoral politics. This wasn't defensive anymore. This was tactical. And the markets? They panicked. Tesla froze shipments to China. Deere & Co. lost $2 billion in just 2 days. Soybean futures tanked by 4.3%, sending shockwaves through global trade. But even in that chaos, there was a quiet storm brewing. A shift that was far more ominous, far more permanent. While the media screamed about tariffs and trade wars, Beijing was already moving pieces on a far bigger board. Behind closed doors, China started distancing itself from the US dollar. Its US Treasury holdings plunged to $668 billion, a staggering 15-year low. But that wasn't even the most terrifying part. China's state banks, giants like the Construction Bank and ICBC, stopped issuing dollar-denominated loans for state-backed projects. Instead, they pivoted to financing backed by the renminbi and the euro. This was no mere hedging. It was a calculated dismantling of its exposure to the dollar system. Goldman Sachs's Maggie Wei didn't mince words. This is a soft retreat, a decoupling engineered to preempt US financial weapons before they can be deployed. The question is, what exactly is China preparing for? What's looming on the horizon? The answer came a day later, wrapped in cold, bureaucratic language. On April 11th, China's Ministry of Commerce labeled certain US imports as no longer commercially viable. The phrasing seemed dry, even lifeless, but the implications were lethal. American goods weren't just being banned, they were being declared inefficient, irrelevant. It was a strategic framing that allowed Beijing to sidestep WTO backlash, while quietly nudging its domestic firms to sever ties with the US. And sever ties they did. BYD, a Chinese tech giant, walked away from a $500 million sensor deal with an American firm just days after the announcement. Henry Ga, a trade law expert, called it for what it was. A regulatory green light for disengagement, wrapped in the guise of market logic. But here's the real question. What happens when this logic becomes law? When market-driven decoupling becomes the norm rather than the exception? Some of America's most important allies are already hedging their bets. In March, Germany's BASF signed a staggering $7.2 billion deal in Guangdong, its largest foreign investment outside Europe. This despite immense US pressure to scale back ties with China. Saudi Arabia? They went even further, settling a historic crude oil deal with China's CIPC. Not in dollars, but using China's digital yuan. And it doesn't stop there. France is lobbying for stronger ties with China's Belt and Road Initiative, while Brazil pushes to integrate China's payment systems across Latin America. These aren't isolated random events. These are deliberate, strategic realignments, quiet shifts in global power that no one is acknowledging until it's far too late. City strategist David Lubin warned, a multipolar trading order is emerging, and the US is no longer the default anchor. If even America's allies are no longer following its trade policies, how long before the US finds itself standing alone? Washington's once formidable arsenal of sanctions? It's becoming a paper tiger. As of April 20th, 2025, more than 640 Chinese entities have been sanctioned, yet China's trade remains unshaken. Exports to ASEAN surged by 7.4% year-over-year in the first quarter. The dollar's grip on global finance is slipping. In 2020, the yuan represented just 2.2% of global SWIFT payments. Today it's over 6.3%. Even the semiconductor chokehold is starting to break. Huawei just unveiled a 7nm chip, built using Chinese lithography tools and Dutch machinery stockpiled before the bans. Analysts are stunned, but they shouldn't be. The very sanctions intended to strangle China's tech ambitions have instead acted as rocket. Former U.S. Trade Representative Robert Lighthizer finally admitted what was once unthinkable. We underestimated their capacity to work around us. If sanctions are backfiring, then what's left? Wall Street isn't waiting for Washington's next move. On April 10th, the Dow Jones plunged by 1,000 points, wiping out over $500 billion in value in a single day. The hit came after China's tariffs slammed U.S. agriculture, industrial machinery, and electric vehicle parts. Archer Daniels Midland plummeted by 11% in just 2 days. Darren Cody warned that $3.2 billion worth of inventory bound for China could now be completely worthless. Goldman Sachs slashed its Q2 U.S. GDP forecast from 2.3% to just 1.5%, citing the fallout from the tariffs and the growing drag from collapsing exports. Former Treasury Secretary Larry Summers summed it up perfectly on Bloomberg. The markets are telling us something the administration hasn't fully processed yet. The storm has already arrived, and if Washington doesn't act soon, it may be too late to steer the ship away from the abyss. This is no longer a mere trade skirmish. It's an economic firestorm, and it's already raging out of control. What happens when the world's largest economy no longer commands the rhythm of the world? What happens when the very rules that shape the post-World War II order, the rules that were crafted in Washington, enforced through the power of the dollar, and revered across continents, begin to splinter and crack? Not because of one catastrophic event, but because of countless silent shifts. The unraveling won't be marked by dramatic explosions. It will be marked by a haunting silence. China isn't racing towards conflict. No, it's advancing with chilling precision, a slow burn that stretches across generations. This isn't about thinking in quarterly cycles. It's about thinking in dynasties. While Washington stumbles from one election to the next, Beijing is calculating a 25-year plan, methodically, calmly, insulating itself on every front, economically, technologically, ideologically. And the numbers, they don't lie. A 34% increase in chip production year over year isn't a headline to be glossed over. It's a brick in the foundation of something monumental. Slashing U.S. soybean imports by 70% over 6 years isn't just a trade adjustment. It's a deliberate act of strategic decoupling. Beijing isn't merely pulling back. It's constructing an entirely new path forward. Every new grain deal with Kazakhstan, every new food reserve, every shift in its sovereign wealth portfolio speaks to one overarching goal: resilience. Not the kind of resilience that flinches when under pressure, but the kind that doesn't even. Meanwhile, across the Pacific, the U.S. is caught in a mad scramble. Inflation climbs higher. Households are suffocating under rising costs. Political rhetoric grows louder, with calls for economic nationalism that are as empty as they are chaotic. The Trump camp demands escalation, more tariffs, more friction, more threats. But the markets have already started to react. Futures in agriculture vanish. Tech supply chains reroute. And retail giants like Walmart are sounding alarms about surging input costs and rising prices. But this isn't just about inflation. It's about a seismic, irreversible shift. These changes aren't cyclical, they're foundational. And they're happening across every aspect of global economics. In the realm of finance, China is quietly and steadily peeling away from the dollar system, layer by layer. This isn't about seeking better returns. It's about preparing for a future where dollar dependence is a liability, not a strength. The digital yuan isn't just a novelty. It's a harbinger of an entirely new system. When China cleared a $2.9 billion oil deal outside the US dollar on April 5th, it wasn't showing off. It was conducting a test. And the test passed. Now imagine this process scaling, not in isolation but in tandem with BRICS, Africa, Latin America. Picture a world where oil, grain, lithium, and semiconductors flow across borders with zero US dollar exposure. Picture the Federal Reserve losing its seat at the global table. Not because of weakness, but because of irrelevance. The technological divide? It's growing at breakneck speed. The US tried to use sanctions to cripple China's tech sector. Instead, it sparked a wildfire of innovation. Companies like Huawei are no longer just surviving, they're redefining the future. Xiaomi isn't sitting around waiting for approval to expand, it's already building in Mexico. TikTok isn't just a cultural force, it's a geopolitical weapon, a battlefield in the fight for the future of AI. Meanwhile, as the US dithers over regulations, China is quietly constructing the architecture for tomorrow's world. On the military front, the shift is more subtle, but just as relentless. The People's Liberation Army doesn't need to match the US in a conventional arms race. It only needs to make US intervention too costly to even consider. The South China Sea, militarized. Taiwan, once a red line, is now a mere pawn. And Beijing, It's not playing for today, it's playing for decades into the future. Socially, the cracks are becoming impossible to ignore. In the US, polarization has reached an all-time high. Every election feels like the apocalypse. Every economic hiccup gets weaponized. Every policy proposal is drowned out by partisan noise. In the midst of this chaos, the ability to think strategically is slipping away. Attention splinters. Gridlock dominates. Meanwhile, China's political structure, rigid as it may be, provides unwavering consistency. It tells a single story. It unites its people under a single narrative. It turns sacrifice into nationalism. While the model has its weaknesses, it thrives in times of transition, especially in moments like this, when the world is changing so fast, and strength lies not in consensus, but in unity. Globally, we are watching a realignment unfold before our eyes. A shift that bears more resemblance to the Cold War than the globalized world we've known. Trade no longer flows by market logic. It's being driven by geopolitical trust. We're seeing ally shoring, tech bans, visa restrictions. The future is no longer interconnected, it's fragmented. So when Morgan Stanley warns that we may have passed the point where the two economies can fully reintegrate, it's not just a cautionary tale, it's an obituary. And what lies ahead? That's the trillion-dollar question. The US still holds immense power. The dollar remains the global reserve currency. Its military is unrivaled. Its capacity for innovation is unmatched. But power depends on stability. And right now, America's internal contradictions are becoming its greatest liabilities. If domestic politics remain this fractured, if economic strategy remains this ad hoc, long-term credibility will erode, slowly but surely. And meanwhile, China quietly continues to weave together its new system, brick by brick, fiber by fiber. It's not trying to win the old game, it's replacing the whole board. So, we leave you with this. What if the next great global order isn't built by military conquest or catastrophic collapse, but by quiet substitution? A world where the US is still playing checkers while everyone else is busy building an entirely new kind of board? And if the new rules are being written in Mandarin, through code instead of treaties, through digital ledgers instead of dollars, does America even get to play? Let us know in the comments. And remember, this isn't future casting. This is already